earnings of the day. Capital goods major Larsen Toubro. That one managed to post a decent set of numbers actually in the third quarter thanks to a sharp rise in new orders that it received. And while the bottom line met street expectations, there were the revenues which were a spot of bother. Anisha Jain, who tracks this stock very closely, is joining us with the fine print. Anisha.
Well, yes, let me start with the headline numbers first. The top line of the company grew by around 8%, which is a tad bit lower than our expectations, but a good performance there. In terms of the EBITDA, in terms of the margins, it's pretty much in line with our estimates at 11.8% versus our estimated 11.9%. Bottom line, again, a little shy of expectations with a growth of around 19% versus an estimated of 21%. Now, let's look at the positives that we have seen in the result. First of all, order inflows. Now, the street was expecting that the management will cut down its guidance, but that has not happened, and the street would cheer that particular thing. The order inflow of the company has gone up by around 11% on a year-to-year basis. Now, in terms of the international order inflows, that was a concern for the street. The management said that there has been no cancellation of orders as such. There might be a little bit of deferment happening in the Middle Eastern business, but no cancellation as such. So that might be a positive there. In terms of the revenue guidance, they say that they are on line to meet the revenue guidance of 10 to 15% growth in the year. But if you look at it, in the first half of the financial year on a consolidated basis, the revenue was up around 9%. This quarter as well, they have improved their top line by around 8% on a year-to-year basis. So reaching a number of 10 to 15% might be a little hefty, but numbers of L&T has always been back-ended. The quarter 4 is usually better for the company there. So they might be able to meet their management guidance as far as the top line is concerned. In terms of the negatives, let's look at the segment breakup there. The metallurgical and material handling business reported a loss of around 25 crores versus a profit of 40 crores in last year. The hydrocarbon business on the other side has performed well with a profit of 39 crores versus a loss of 138 crores. So again, the hydrocarbon business concern that we have been allayed over here. In terms of the other negative, the standalone business is a worry for me. The margins there have come down to 6.8% versus a 10.5% last year. Now remember, this is the core business of the company, and even the revenues there has come off by around 1.5%. So that is one thing that I'll look for the management guidance and management discussion on that. Other than that, on the order inflow, the management answered most of the questions. Let's listen in to what management had to say on order inflow.
We are at 93,000 crores at the 9-month period. Previous year, March 15, we had orders of 1,55,000 crores. During the last interaction, we scaled the guidance down, original guidance of 15%, down to about 5 to 7% based on our assessment of the pipeline. Nothing significantly has changed despite our 11% growth in quarter 3